Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
We have a little catch up to do because last week he was off and we've gone nowhere fast, big picture, after 2 weeks of sideways and then a tariff tease on Sunday evening, which caused this kind of short-term jump risk of 100 points on Monday. We petered out right at that kind of 57.83 area, which I had given prior. Basically, this is a really stronger resistance than I even expected because we not only softened this morning, but we broke through the 3-day and went right into the 8-day, which had been a price target for this week if we get rejected at 57.83. So we hit it today on, again, some tariff news coming forward a little bit. We've got a budget right now bill that's getting wrapped up with a debt ceiling inclusion, and it's actually very dangerous for our fiscal spending structure and what that means for yield. So we'll talk about that a little bit, but we've had a walk up in the yields, and equities had been positively correlated with a rising 10-year U.S. yield. But today I think it was a little bit different. I think they got scared on both tariffs and the GOP kind of pushing forward with this bill with debt ceiling included, which really isn't supposed to happen until more like August. So anyway, long story short, we had a mercurial market reaction to tariffs on again, off again, delayed. April 2nd is coming, and there isn't any volatility really priced in to this binary event. Maybe the market doesn't trust that Trump is going to actually follow through, but we have jump risk up and down. Hans, what are you seeing? Because you had actually said when we did this title on Monday, you said, yeah, because we're definitely not out of the woods. What did you see and what are you seeing next?
Yeah. And so that's the thing. We've had a nice rally here. When we talked about it, maybe getting 150, 200 point rally, which we got on the backs of a lot of structural things that we were sort of looking at, which is the relaxing of vol and sort of upside pockets where there was certainly some room for those ETFs to kind of pile in. Although we certainly didn't see massive runs in MAG. We saw some runs in a few names, some of them getting filled in pretty quickly though, even in strong names that I love like Meta getting filled in pretty quickly. So we did have these bounces, but look, we rallied almost 5%. We were down 10%. We rallied almost 5% to what were we down? Maybe 2% on the year. So, I don't think you can complain if you're an equity holder and you're sort of looking at this market, given the backdrop, which is chaotic and uncertain to say the least, and you're down 2% on the year. That's pretty decent. So I guess we kind of maybe ran into some of that reality today, which was the freight train, the light at the end of the tunnel being the freight train that we kind of forgot about for a bit. But mechanically, we had every reason to rally. We sort of had all these things. So to me, it kind of highlights the fact that these things are very important and you need to pay attention to dealer gamma, and you need to pay attention to all these sort of things, the synthetic gamma and all these things below the surface that are really kind of pushing and pulling markets right now, and probably kind of helping to keep volatility really, the vol gauges relatively contained. Here's your VIX, didn't get above 30 here, even in credit markets. Pretty, as Bloomberg says here, keep calm and carry on.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.